What if I told you the money in your pocket is at the heart of a quiet war? A war fought not with soldiers, but with code and algorithms. This isn't a battle you'll see on the news or read about in history books, but it's happening all around us, every single day. The very nature of money, how we earn it, spend it, and even think about it, is being transformed in ways most of us barely notice. Every time you tap your phone to pay, you're choosing a side in this conflict, often without realizing it. Each digital transaction is a small act in a much larger story, a story that's rewriting the rules of finance. With a simple gesture, you're participating in a global shift, one that's redefining trust, privacy, and the very meaning of value. This is the story of a silent revolution reshaping our financial world. It's a revolution that's unfolding in boardrooms, on trading floors, and in the palms of our hands. The stakes are enormous, and the outcome will touch every corner of our lives. It's a battle between centuries-old banking traditions and the relentless march of technology. The old guard, with its rituals and rules, faces a new breed of innovators who see finance as a playground for creativity and disruption. On one side, marble pillars and steel vaults of traditional banks, symbols of stability and trust. These institutions have weathered wars, depressions, and revolutions, standing as pillars of the global economy for generations. On the other, fintechs, fast, agile, and living inside the devices we use every day. They move at the speed of code, breaking down barriers and making financial services more accessible than ever before. They promise finance that's instant, personal, and accessible to all. No more waiting in line, no more paperwork, just seamless, on-demand access to your money, wherever you are. The stakes? Control over the global flow of money, access to capital, and who profits from trillions moved daily. It's about who sets the rules, who gets included, and who gets left behind as the world's wealth changes hands at lightning speed. The very architecture of our economic system is being rewritten. New foundations are being laid, not in stone or steel, but in lines of code and digital ledgers that span the globe. For most of us, this conflict is invisible, masked by the convenience of a new app or a quick loan. We see only the benefits, speed, simplicity, and choice. But behind the scenes, the power dynamics of money are shifting in profound ways. But beneath the surface lies a dramatic struggle for the future of money. It's a contest of vision, ambition, and technology, with winners and losers yet to be decided. Is the age of the traditional bank ending, or is this just the start of its greatest transformation? The answer will shape not just our wallets but the very fabric of society for generations to come. Imagine a fortress, centuries old, built on trust and tradition. This is traditional banking. For generations, these institutions stood as pillars of stability, their grand facades and marble halls symbolizing security and reliability. People entrusted their life savings, their dreams, and their futures to these banks, believing in their promise to safeguard what mattered most. For decades, if you needed a loan, to save, or to send money, you went through them. Banks were the gatekeepers, controlling access to financial services and shaping the very way people interacted with money. Their power came from size, history, and the trust people placed in them. The bigger the bank, the more unshakable it seemed, an institution too important to fail. But the world outside the fortress changed. Technology began to reshape every aspect of daily life, and the pace of change only accelerated. The internet connected the globe, and smartphones put a bank in every pocket. Suddenly, anyone could access their money, transfer funds, or pay bills with just a tap. Suddenly, the slow, paper-based processes of banks felt outdated. Waiting in line, filling out forms, and dealing with red tape became relics of a bygone era. People wanted instant gratification. Why not with their money? The expectation for speed and convenience grew louder with every new app and digital service. Enter Fintech, not a single company, but a movement of startups and innovators. These digital pioneers saw opportunity where others saw obstacles. They saw the cracks in the fortress walls. The old ways were no longer enough to meet the demands of a connected, fast-moving world. The bank's greatest strength, their size, became their weakness. Large, complex organizations struggled to keep up with nimble, tech-driven competitors. Burdened by legacy systems, the old guard was too slow to adapt. Outdated technology and rigid processes held them back, even as the world raced ahead. Fintech challengers were nimble, digital native, and ready to redefine the game. They built new tools, new platforms, and new ways to move money. Faster, smarter, and more accessible than ever before. They didn't just want to compete, they wanted to change the rules. Their vision was to democratize finance, making it open to all, not just the privileged few. The monopoly of the old guard was over, a new era was dawning, and the balance of power was shifting. The financial revolution had begun. The future of money would be written not in stone, but in code. The rise of fintech was a perfect storm of crisis and innovation. It wasn't just a technological shift, it was a response to a world shaken by uncertainty, where the old rules no longer seemed to work. The financial world was about to be rewritten. After the 2008 financial crisis, trust in big banks crumbled, and people looked for alternatives. The collapse exposed deep flaws in the system, leaving millions feeling betrayed and powerless. Suddenly, the idea of putting your money in the hands of a faceless institution felt risky, even reckless. Technology hit a tipping point. Cloud computing, data analytics, and smartphones made digital finance possible for everyone. For the first time, powerful tools were in the hands of ordinary people, not just Wall Street insiders. The barriers to entry were falling fast. A new breed of entrepreneurs, coders, designers, data scientists, saw finance as a problem to solve, not a tradition to uphold. They were outsiders, unburdened by legacy thinking, driven by curiosity and a desire to disrupt. They asked, why does money move slower than an email? Why can't sending cash be as easy as sending a text? These questions sparked a revolution. Why is a loan so complicated? Why does it take days or even weeks to get approved? The old system was full of friction, paperwork, and endless waiting. Their goal, make money move as freely as information. They imagined a world where financial services were instant, borderless, and available to all. Early pioneers like PayPal and Square made payments and credit card acceptance simple. They proved that technology could break down barriers and empower small businesses and individuals alike. Peer-to-peer lending cut out the middleman. Suddenly, people could borrow and lend directly, building trust through technology instead of institutions. Each success proved small. Teams could outperform banking giants in specific areas. The Davids of fintech were nimble, creative, and unafraid to challenge the status quo. The fintech Davids used beautifully designed apps as their slingshots. Their secret weapon was simplicity, making complex financial tasks feel effortless. Their power was digital expertise and customer focus. They listened to users, iterated quickly, and built products that people actually loved to use. They made banking seamless, intuitive, and personal. For the first time, finance felt human, tailored to your needs, right in your pocket. The old way suddenly felt broken. The world was ready for a new kind of financial hero, one born not in marble halls, but in code, creativity, and the courage to challenge the giants. How do fintechs challenge giants with a fraction of the resources? By building financial services differently. Traditional banks are like department stores. Fintechs are specialized boutiques. They focus on doing one thing perfectly. Payments, loans, investments, or transfers. Need a loan? At a bank, it's paperwork and waiting. With fintech, it's a few taps and instant algorithms. These algorithms analyze thousands of data points in seconds, not just your credit score. The result? Faster, more accurate decisions. The process is digital, not bureaucratic. Fintechs have unbundled banking. One company for payments, another for savings, another for investing. APIs connect these services, letting you assemble your own personalized bank on your phone. The consumer picks the best from each provider. The bank is no longer a building, it's a network of apps. Flexibility and choice are the new norm. The future of finance is modular and mobile. The magic of fintech rests on three pillars: data, automation, and user experience. Data is the fuel. Every click and purchase tells a story. Fintechs use this data to offer personalized products and predict needs. Automation is the engine. Manual processes are replaced by efficient, digital workflows. This lean model means lower costs and better rates for customers. User experience is the obsession. Finance becomes simple, intuitive, even enjoyable. Design borrowed from social media and gaming makes apps engaging and easy. Sending money to a friend. No more checks or wire transfers, just a tap and an emoji. Fintechs turn chores into seamless digital moments. The result? loyalty, empowerment, and a new relationship with money. Traditional banks struggle to match this speed and personalization. The fintech miracle is making finance accessible and human. Technology is transforming how we interact with our money. The fintech revolution is reshaping economies and societies worldwide. Its most profound impact, financial inclusion. Billions without bank accounts now access financial services through mobile phones. In Kenya, a farmer can save, borrow, and get paid, all from a simple phone. Mobile money like M-Pesa is a ladder to economic empowerment. Small businesses, once ignored by banks, now get loans from fintech lenders using alternative data. This democratizes access to capital and fuels growth. Governments are taking notice. Some foster fintech innovation, others explore digital currencies. Regulatory sandboxes let startups test new ideas safely. Even the nature of money is being reimagined. The shift is global, and the effects are transformative. The future of finance is being written in code. For most people, this financial battle feels distant, but its effects are real. We now expect speed and convenience. No more waiting days for transactions. Fintechs drove down fees, forcing banks to compete and benefit consumers. We have more choice. Neobanks for spending, robo-advisors for investing, peer-to-peer loans. We're empowered to build our own financial toolkit. But new risks emerge: data privacy, cybersecurity, and algorithmic fairness. Who owns our data? Are these platforms secure? Algorithms can help or harm if not designed carefully. The promise of democratized finance comes with responsibility. The code that empowers us must also protect us. The old guard isn't standing still. Banks are fighting back, leveraging resources and customer bases to compete digitally. Their first move: acquisition. If you can't beat fintechs, buy them. Banks snap up startups, integrating new tech and talent instantly. The lines between old and new are blurring. Some banks choose collaboration, opening their systems to fintech partners via APIs. This hybrid model combines bank trust with fintech agility. Others try to innovate from within, launching digital-only brands and hiring tech talent. But transforming a giant is hard. It's a cultural revolution. Banks must learn to move fast and think like tech companies. Their survival depends on it. The battle is far from over. We stand at a crossroads in the history of money. The war between banks and fintechs has brought choice, access, and change. Will fintechs replace banks, or will the old guard adapt and merge with the new? Perhaps the future is a hybrid, where technology and tradition combine. Every financial company will be a tech company, and the customer will win. The revolution is irreversible. Our relationship with money is forever changed. As we navigate this new world, we must ask, who will hold the keys? And will this future be more equitable for all? Only time will tell.